Okay, colleagues, ladies and gentlemen, a good evening to you all. My name is Kenneth Twesije. I am the CEO and founder of Tech Buzz Hub. I have quite a few colleagues who will be joining in from Startup Funding Vehicles, which is an initiative that we are talking about this evening. So for new members, certainly you're wondering what is Startup Funding Vehicles. So Startup Funding Vehicles is an initiative by TechBuzz Hub looking forward to strengthening our local investment networks. And it's not generally for TechBuzz, it is an open ecosystem project. So any person anywhere can choose to join any institution, and the goal and objective is promoting and empowering local investors to support homegrown startups. Of course, by doing that, it means that we will be bridging the gap of the funding gap, which currently stands at about 55% and plus. When we interviewed entrepreneurs, over 55% of them mention funding as their biggest challenge or investment as their biggest challenge. And of course, it affects the growth and access to external investment as a result. Of course, if your home people haven't yet believed in you, it becomes very hard for externals to also, believe in you, to invest more in you. And of course, if SFV grows and becomes strong, it means that some of those challenges will be solved. A small case study here is learning from the Big Four. Big Four really means the countries in Africa that lead when it comes to startups, and so is when it comes to access to investment locally, to be specific. For example, in Nigeria, they were able to raise 1.2 billion in 2022. Kenya's Silicon Savannah contributed 8% to their GDP again in 2022. South Africa was able to grow its financial inclusion by 2023 since 2014 to 2021. What that means is, I think the business that we often hear the president talking about, money economy, people getting access to money, of course, through mobile phones and also and many other solutions. And then Egypt was also able to raise 400 millions locally. The current figures that I have is even Tunisia in 2024 was able to raise around 400 million. Though that is general, I think, both external and internal. So really, figures for Uganda, they are very scanty and very small. That is why we think that this project, if we together collaborate, we should be able to change the narrative. Looking at a funding landscape, in a period of 5 years, Africa has, since 2019 to 2023, it was established that Africa raised about 12 billion US dollars external funding. And of course, this is money to startups. That is what we're talking about. And the biggest share was taken by Nigeria, followed by Kenya, followed by South Africa and Egypt. Uganda looks very small because certainly you see it only raised 160 million US dollars. So what that also speaks is, when you correlate or relate to the different active investor networks, you'll find that Nigeria has 6 of them, South Africa has 5 of them, Egypt has 5 of them, Kenya has 3. It's the one that actually challenges the odds. And also Uganda, as you can see, we have 3 of them. I know some of these statistics have already changed. Certainly in Uganda, we might have more, as we know that our guest speaker is more informed on that area and will inform us more. But the more active angel networks or VC networks in the country, the more the chances of raising investment, whether internally or externally. So what is the vision board of SFV? Creating or building a robust investment culture in Uganda, but as well as making sure that the investors in this country or potential investors in this country have access to the right knowledge through education and such as these engagements. Also enhancing stakeholders to look at or to enhance local funding, sharing insights and best practices from industry experts. Just like this evening, we shall get to hear from our expert, Mr. Kenneth Degesi. Milestones, SFV has been able to have certain milestones so far. We have collaborated with UNCST, Uganda National Council for Science and Technology, to have a research training since we look forward to building up a research undertaking a research. We have actively we have been active in the investor ecosystem of late since we started not more than 8 months ago. And we have so far hosted 5 sessions of this kind. And these are some of the other activities we have participated in. National Competitiveness Forum. We have, of course, on this side is the research, engagement, and activity. We have hosted the Tunisian Flat Six Labs on their road trip in Uganda, and also been a part of some fundraising activities. What next? We look forward to the funding landscape in Uganda, developing developing an investor network or investor networks in Uganda. So this is about empowering, then investment support centers, diverse funding mechanisms, and of course, strategic collaborations. And this is one of the biggest areas we look forward to. So if you have access to people who we can collaborate with, institutions, corporate venture capital firms or venture companies, we are happy to connect. What would be the proactive action we encourage in this conversation? Sorry. Is of course partaking into some of these learnings, investor knowledge learning series, being part of Uganda investor networks or ecosystem, and of course to begin with is by joining startup funding vehicles. Certainly as a member, this link takes you to the form of expression of interest to become a member of startup funding vehicles. Why we do not ask everyone to be is because we want people who are really very serious to taking this conversation to the next level. We look forward to collaborations and partnerships, and ahead of time, we are going actually in the next 2 weeks from now, we shall be soft launching during the Science, Technology and Innovation Office of the President National Science Week happening between 19th and 20th of this month. So SFV will be soft launching. And during that soft launch, several programs are also going to get started after that launch. And these are some of them: from Kampala to Nairobi, a gateway to Africa's innovation ecosystem through AfriLabs, become an investor training. Very soon we shall be having not like these kind of trainings, but deliberate trainings to get you making your first, investment. And we all know that the right investment has to be made with, you must own the decision to take the investment. So that is what will be happening soon. Of course, we will also be looking at becoming entrepreneurs, so entrepreneurs are not left behind, and how the retired should invest. These are some of the sessions we have so far hosted. In the past, as earlier mentioned, 5 of them. We have hosted Flat Six Labs. We have hosted Capital Markets Authority together with the East African Venture Capital Association. We have hosted FSD Uganda under their deal flow facility. We have hosted FI Consults. from Nairobi, and then Uganda Investment Authority. And of course, today we host our most
Hello? Hello? I think we lost the hosts, maybe due to network challenges.
Yeah, it should be.
Okay.
Sorry, colleagues, my connection just got a little got off. Sorry, but I'm back. As I was saying that to join startup funding vehicles isn't free for purposes of being able to run an active, at least an active office or an active secretariat, so that we are able to proactively run this conversation. And whichever package you choose to take, it comes with benefits, of course, but as well as responsibilities. Yeah, so as I conclude,
Have we lost him again, or the challenge is on my side?
Sorry. Kenneth, I want to invite you to take us through the conversation at this stage. Thank you. Kenneth, are you able to hear me?
Yes, I can hear you.
Great.
Okay, I'll just share my screen, and then you can. Then I'll just have a guide to what I'm going to be talking about, and then we can get into the Q&A very quickly. Is it possible? Let me see. I don't know if I have permission to share my screen. Let me just see this.
Me reconfirm. You are a co-host. You should be able to now, I think.
Okay. I should be able to. Yes. Sorry. All right. Let me just share my screen very quickly. So yeah, good Good evening, everyone. I hope you can hear me.
Yes, we can hear
you.
So yeah, great that you're doing this, Kenneth. I am also Kenneth. And when did we first meet, Kenneth? Was it like how many years ago? Very many years ago.
Around 2018, I think.
2018 now? Yeah.
Yes, around 7-8 years.
So Kenneth has been at this a very long time, and I just want to applaud him for all the work he does for our ecosystem. And as Kenneth, I'm also going to just share a bit about the lessons I've learned from trying to build an investor ecosystem. So just as a guide to what I'll be sharing about, I've just prepared a very brief presentation, and I'd rather we get into a discussion really quickly, as opposed to spending time talking about things, and just share practical experience as much as possible where I can. So about me. So Kenneth Legacy, I am an investment professional, been at this about 20 years plus. Although strictly speaking, finance and investing, I've been doing that maybe for the past 15 years. And what I do on a day-to-day basis mostly is advisory, helping people who are looking to invest money on the continent. But 10 years ago, I just returned to Uganda from the UK, where I'd been for most of my professional life. And I got interested in the startup ecosystem. And that's when I got to meet people like Kenneth and some of the other ecosystem builders like the Innovation Village, Design Hub, Outbox, and then Hive Collab. And I spent time at these spaces. In addition to spending time at these spaces, I met some interesting founders whom I helped to build businesses by being part of their co-founding team. Some of those companies include, the very first one was Sente, which is still going. I'm chairman of the board at that one. Then there was Digest Africa, which I haven't given up on, especially now that AI is here. It's a data analytics business. There was these others I've since been involved in following that time. But the thing I quickly noticed is I used to do a lot of mentorship sessions and helping these entrepreneurs, but I noticed that in our ecosystem, there were no local angels and local investors. And what I also noticed was that it was a neglected ecosystem. And so we needed very quickly to build local capital that will believe in these founders. But secondly, that will then introduce these founders to the follow-on capital that you need. So in the process, I remember with my friend CK at the Innovation Village, we started Kampala Angel Investment Network to sort of build that angel investment network. The journey usually for an entrepreneur is that they build a business, they grow it, they sell the business via what is called an exit, and then from that exit, they have money to then come and invest. Usually they come and invest by setting up a VC fund. But for most of us entrepreneurs and founders at the time, or ecosystem builders at the time, we didn't have any exits in the market. We now have some to talk about, but that money hadn't yet come back into the ecosystem. So you needed to sort of create a vehicle that will help investors at the entrepreneurs at the early stage get that pre-seed angel capital. So besides Kane, we then set up the 97 fund. We had a very brief stint deploying money, about $1 million to about 10 businesses, mostly non-dilutive capital together with mentorship to 10 businesses. But we failed to raise funding into the 97 fund to be a proper venture or VC fund. But the legal entity still exists. For Kane, we also ran some deal days where we found entrepreneurs and we would match them to local angels. And most times what would happen is the amount of funding the local angels wanted to invest and the amount of money the entrepreneurs wanted, there was a bit of a mismatch. The valuation that local angels wanted to invest at, the valuation the entrepreneurs expected, there was a bit of a mismatch. And as well, some of the local angels were not aligned in terms of the type of risk you expected from early stage businesses. Most of them were behaving more like local lenders and money lenders, comparing venture capital to asset classes such as debt or real estate or unit trust. So you could see that mismatch. So subsequently, I noticed there is a gap around just educating investors and finding entrepreneurs and making sure they are matched to the needs of these investors. Why am I telling this story? I'm telling this story just to show you the experience and lessons I've had in our local ecosystem around trying to build an investor network or ecosystem. So I then founded Otis Africa Capital. We are an investments and advisory firm. And at Otis Africa Capital, I've had the experience then to help institutional local capital vehicles get formed. Internally, we created our own local capital vehicles, one on the lending or private debt side, focused on giving you money for working capital. Because we saw a lot of the entrepreneurs, they don't have the funding to help them scale by generating revenue very quickly. So they're attractive and high growth for VC. But we also built out a venture vehicle whose model was around venture building. And that one is giving some money, yes, but mostly providing linkages to follow-on capital. And we also learned that for our market, the focus should be, as our thesis, as Otis Africa Capital, the focus should be around B2B businesses. So, that is really my background and my lessons that I bring to building an ecosystem, an investor ecosystem. And so now I'll just maybe go into just how I'm going to style what I'm going to talk about. And this is just showing some of the work we've done in the process. So as I mentioned, the 97 fund, what we did there was structuring and setting up the fund itself, then management and deploying of the fund. I told you we do venture building. Some of the companies we worked for included, say, Postman app. I told you we set up advisory for a locally domiciled early stage fund. You may know of it. It's called Inua Capital. And actually, Kenneth, I don't know if Kim is acceptable, but it would be good to get her on SFV just for her to share a lot of our insights and knowledge. But in the period, we've been spending most of our time at Otis Africa Capital just working with preparing local businesses for raising capital or for getting investor capital, and also preparing local investors to deploy money to early stage startups. So I'll now go into what I was hoping to share today. My thoughts on what I see as apologies, just what I see as a roadmap for what I'll talk about today. If you're going to be part of our investor ecosystem in Uganda or indeed in Africa. Number one is appreciating that there's a case for scalable startups in Africa. Kenneth gave us some of the statistics, But suffice to say that, that of course, Africa is going to be home to over 1 billion youth by 2050, according to UN statistics. And as a result, it's encouraging innovation and startups and are being built. These startups are creating over 3 million jobs in Africa. That's the statistics by Disrupt Africa. And yet, more than 80% of these startups die or fail within their first 3 years. So early stage capital still remains under 10% of funding in most of African markets, but more shockingly, less than 1% of global venture funding comes to Africa. So this is the case really for building scalable startups in Africa and for bringing smart capital to work in Africa. But what does smart capital look like? And what have my lessons taught me? So smart capital is really not just about money. And from the background I gave, you can see that smart capital is about founders needing mentorship, founders needing access to networks, founders needing revenue or customers so that they can grow. Because when you define what a startup is, a startup, the technical definition people say is a business in search of a business in search of a repeatable business model. But more importantly, though, it is a fast-growing business that is solving a problem for which there is a large addressable market. And for the startup to unlock the value in that addressable market, it must be able to reach those customers and get them to buy. So smart capital to a startup, and as you think about becoming an investor in startups, you must be able to bring customer access to your startups. And for some of the companies we worked with, for example, at the 97 Fund or even at Autos Africa Capital now, it was there were some that were growing revenue. One of them I knew grew revenue 12x in a single year. This company was in the healthcare sector. Of course, there might have been implications from COVID, but still, it was impressive growth. Yeah. So we were helping them with that growth by being able to bring them access to and positioning them for that opportunity at that time in their growth journey. So introductions to potential buyers of their product, making sure they are compliant from a regulatory point of view so that they stay in operations and service those clients, giving them working capital needs around consumables. So that kind of capital enabled them to be able to grow. What this means is that as an investor, you must be ready to engage beyond the paycheck that you're giving the entrepreneurs. Right now, for example, I'm mentoring or helping a business that is looking to build packaging solutions for Africa, starting with Uganda as a pilot. But because I was already funding a similar business on a profit share basis, that gives me the knowledge to be able to bring these insights to that business. So we need smart. If you're going to build yourself out as an investor and in this ecosystem, smart capital becomes important. But how then do you transform yourself into what I'd call a high impact startup investor? There are certain toolkits that you need to have. One is learning the instruments that startups get funded with. So whether it's straight equity and understanding that you'll probably be investing in ordinary shares, especially if you're investing earlier on, before a startup goes to, say, a Series A, Series B, and so on. Understanding instruments like simplified agreements for future equity, understanding instruments like convertible loans and convertible notes, and knowing the relevant clauses to negotiate with entrepreneurs. But secondly, understanding then key metrics, things like customer acquisition costs, lifetime value, monthly recurring revenue, annual recurring revenue, runway. More importantly now, time to break even for a startup. Because increasingly what we're seeing is that revenue is important, especially if funding is going to dry up from your investors. So as someone who wants to be an investor in startups and be able to be useful to them, it's important that you understand these key metrics. And relatedly then is startups and entrepreneurs, when they need capital, they will need it quickly, and they would want to know what your process is to give them that capital. And that means creating a standard, what we call a pipeline and due diligence flow. So, and that will bring me on to the next point. But you need to know, okay, if I'm going to be investing in startups, where do I source my pipeline? What do I want to check before I invest? How do I connect to that market of where the startups are, monitor progress and find such investors? That means you then need to be collaborating. You must be ready to syndicate and share deals, and you must be ready to link these entrepreneurs and startups to follow on funding. So that's point number 4, collaborate, syndicate, and scale. I mentioned earlier that less than 1% of global venture funding comes to Africa. More shockingly though, when venture funding happens in Africa, most of it is from capital from outward. So what people would call foreign direct investment. So we don't have domestic direct investment. There's a statistic that only 7% of early stage deals in Africa are syndicated locally. Yeah, so that's based on data from the startup deals that have been tracked across by the different providers out there. So it means investor networks like the one we are building at Kane, or like ABAN, Africa Business Angel Networks, or NIBAN, Nairobi Business Angel Networks, or Launch Africa Ventures, who run a network of pre-seed investors, or Hawk, who run a network of diaspora African investors. It's important that these investor networks you can become part of if you're going to be investing, because they help you, 1, source and see deals, 2, reduce risk, and 3, increase the quality or deal access you'll have as an investor. And by syndicating or collaborating, you're able to then pool capital so that you're able to fund larger ticket sizes and at the same time reduce your own exposure as an investor. At Otis Africa Capital, with our private credit vehicles, we've been able to catalyze some syndications, which have enabled us then to be able to do larger tickets for businesses that we otherwise wouldn't have done. But it then means having an understanding of, say, the syndication agreements, the way rights for each of the investors works in the syndicate, the way you do joint monitoring of the investee or the entrepreneur you're giving money. It lightens the load, it reduces the amount you invest, it reduces your risk per investment item. And the last point on this really would be that by sharing and syndicating on deals, we will all learn together, and then we grow the ecosystem sustainably by not being broken as just one investor. So to then close, looking ahead, what do I see, and what are my thoughts on where this is going to go based on these 10 or so years of building this investor ecosystem? So I'm optimistic that by perhaps in the next 5 years or so, we'll continue to see growth in the frontier markets, i.e. markets such as Africa. We'll continue to see more positive stories There was an article recently on LinkedIn by, I believe it was Ian. Ian is one of the big ecosystem builders for Africa, an investor, a founder. He's more famous for having founded Flutterwave and Andela, but he since built Future Africa. But I think he was reposting an article that was saying it costs less per dollar for creating unicorns in Africa than in other parts of the world. So I'm hoping in the next 5 years that we'll suddenly see more unicorns coming out of Africa. But I'm not so wedded to the whole getting unicorns. I'm more driven and more optimistic about the impact that will have on our investor ecosystems. Because, for example, the Paystack startup, when it exited to Stripe and paid out a lot of the founding team and the employees in the startup, in the company, it created angel investors that have then boosted the ecosystem in Nigeria. So I'm more excited that if we have global startups as Africans, that from the exits will create more local investors. But that won't happen if, as African investors, we are not supporting these startups. It means we switch a bit our mindset. So we must lead with our own capital, whether it's in the continent, in the diaspora, through angel networks, or institutional capital. I know some of the licensed fund managers in Uganda are now mooting what we call alternative investment vehicles, because venture capital, private equity, investing in startup is thought of as what is called an alternative investment asset class. But that can be a talk for another day. So my hope and certainly expectation is that we'll have institutional investors coming to this asset class. NSSF started by investing in the Yield Fund, which was an agribusiness private equity fund. I know because I was part of the team that structured that and got them on board, but I'm hoping they can come even further up the risk curve by investing in venture capital. And when they do that, they can do it perhaps by anchoring or investing with some of our local angel networks, local angels, and extend what they were already doing now under their high innovator program, where they were giving money in exchange for rights to own equity. They could just underwrite venture capital as an ecosystem. So my urge then to you, investors who are listening on the call, as I close, is to then look at which networks could you join. Feel free to reach to join startup funding vehicles, Kane, reach out to me at Totus Africa Capital, or educate yourself as individuals so that you can do these things, i.e., make sure you become the smart capital, be available to collaborate and syndicate, behave like a high impact startup investor by knowing the instruments you need to use, understanding the key metrics of startups, and therefore being able to very quickly provide post-investment support as you move towards getting the outsized returns that are known to come from startups. And with those remarks, I thank you all for listening to me, and I'd be happy to take questions and have a discussion. Thank you.
Thank you very much, Mr. Kenneth Legacy. Those are definitely very credible insights. I don't think anyone who has not experienced the ecosystem could make such kind of a delivery or a submission. And I believe all our listeners appreciate why our ecosystem is how it is, especially in terms of investment as well as startups. And I think from this conversation, we have it or get it clear on what the ecosystem would look like in 5 years if we choose to get silent on this conversation, or if we choose to act over and around this conversation, therefore. As we go forward, just a few housekeeping rules again. If you have any question, feel free to raise up your hand and you will be asked to tender in your question. And as I wait for those hands, I want to make a mention that Startup Funding Vehicles is in collaboration with Uganda Management Institute. Uganda Management Institute is Innovation and Incubation Center, as well as many other institutes are coming on, collaborators are coming on board very soon. We shall be having AFBAN, African Federation of Business Angels, coming on board to undertake some investor trainings. And then Makerere University, which will also be coming on board to provide necessary networks, and many others. I believe we only stand under collaboration if we are to excel. Yeah, so, but also before I move forward, allow me recognize a few individuals, especially those who belong to SFV as members. I see Miss Jennifer Nakaiza, I see Eric Jaguara, and I was also seeing someone very pertinent in the ecosystem, especially on the policy side. But looks like they have moved off the session, maybe. Okay, questions. I am seeing I have Mr. Edison and Mr. Bernard. I will start with Mr. Bernard Busura. You can unmute and ask your question. Thank you.
Yeah, so thanks, Mr. Moderator, for the heads up. So can you hear me now?
Yes.
Yes.
We can hear you, Mr. Usura.
Yes, yeah. I mean, so I'll thank Kenneth for presentation. So yeah, I've got two questions. So one, I mean, have you examined the issue of finding the right skill set among founders in the startup, away from having the right skill set in the boardroom? For instance, if people are investing in the healthcare business, what kind of skill sets would you want as a venture capital investor, and what would it take to have it? For instance,
thank you very much, Bernard, for your question. I think we can also take for
would
Edson.
it be slightly expertise, or would it be biased towards just healthcare? And then two, you said most of the money that you're investing in these startups is coming more from overseas than in our local economies. So which points to the question of family-owned offices. I mean, is there room to grow family offices which are able to manage family wealth and invest it in other areas that actually need capital to grow? Thank you.
Okay, thank you very much, Bernard. As Edison, just a second, let me first read this one so that you pronounce the last one, and then Mr. Legacy can respond to those. There's a question from Justus Twinomujuni, which says, I've looked forward to ask, okay, sorry, I've looked forward to ask you all week. Given your vast experience, what drivers excited you to transit from engineering to transit to finance and finally end in venture capitalism? 2, a high-impact investor, what would you look out for in a startup to invest in? 3, on smart capital, how can I join the network such as Kane or Otis? Very interesting questions, and I hope that you can always reference to the chat just to get all the questions, these ones. We can take yours, Edison, and then the rest of the other questions will be, will come after the first round.
All right, thank you, Kenneth. My name is Edson. I work with Relevant. I also invest through our organization into social businesses. So based on your experience with the angel networks, when, let's say, individuals like myself want to invest, what I want is a return. And you see many people are now investing in land and different asset classes. So this brings me to the question, what signs, what successes have we seen with existing angel networks? For example, Kane, maybe others in the ecosystem that have been there longer. What are the signs that show that this is actually an asset class that can return for the investor to encourage us to invest? Thank you.
Yeah. Thanks for the question, Edson and Bernard. And I saw the question from Justus in the chat. I'll just try and take them all together, answer as many as I can. So Bernard, you asked about the education and the skills you look for. I think that aligns and is related a bit to the question that was asked by Justus in the chat, because he said, what do you look out for in a startup to invest in? I know your question was more related to the individual. So when you're looking out for the characteristics of a founder that you want to invest in, and generally a startup, I'd say there's three things, but there's two things for me that are important around. One, the person, or if you're looking at a team, the quality of the team, and then there's a certain characteristic you want of a founder, which is what we call grittiness. Someone who's going to stick at it, be persistent, try and be resilient to make sure that this business will work. Will go out there and talk to someone, try and understand the problem they're solving for, try and establish how is that market there or not. So, and I know I'm not talking about the educational skills of that person, to Bernard's question, but inevitably, if someone has grit and that hard work and that hustle mentality, as we talk about it, they will learn about that area they are working in. But of course, it helps if someone has depth, knowledge, education, technically in that area. So if it's healthcare sector and someone is maybe a doctor, a nurse originally, then that will certainly help. But you're more interested in someone having grittiness, coachability, willingness to go and learn themselves, because the thing about these startups is they will evolve as the startup grows, and the person has to be able to grow with them. So that's a quality you'd look for. The second one you'd look for is about, just because startups are about taking risk on an opportunity that could become large, or that could be addressing a problem in a market that can become very, very large, but you don't want to be doing it at a time that maybe is not right. So the second thing you'd be looking for is, okay, the problem they are solving, can you see that this market will become large? Can you see that the time is right for them? And I'll give the example of the hype that is AI now. There'll be lots of people that are building AI solutions. I'm talking to you from the UK now. The attitude to AI in the global north is different to the one we may have in the global south, even in Africa, in Uganda. So if you find someone building an AI solution in the UK, in the US, in Europe, and someone building it in Uganda, you then have to look critically at it and say, okay, the solution they're building, is there a large market I can see them growing into? Is this the right time? What are the things that need to be in place for them to be successful? So to evaluate, I think, and this is answering Justus's question a bit. So you're looking at the team quality and grit. You're looking at the timing and the size of the opportunity they are building into. And if you find those things align for you, then you listen some more. Now, Bernard, you said a lot of the capital we get is external. That is true, and I said it too. And you're saying, is this an opportunity for us to start to build family offices? Yes, it is. But I'd argue that the kind of capital we need to build our ecosystem is going to be a combination, not just of family offices. Having said that, I do know that some of our high net worth individuals and families that have been successful in business are beginning to look at this asset class. So I do know that some of the more successful business families, and I won't mention their names, were some of the members who would attend at the Kane events to see if there's any businesses that are good, that may align to their objectives as a family business, or that may align with where they want to deploy capital, because they've probably made a return from the business they started, and now they can afford to take risk. So I think we will just see it evolve naturally. But in the meantime, we have to work with what we have. And what we have most times is investment clubs that are pooling capital, professionals that have experience and may reach middle or senior level and are paid relatively well and can afford to deploy some to risk, or DFI capital that we can deploy to startups. And that is why you want organizations like UDC, like NSSF, bringing their money into venture, and either underwriting those of us who are investing in venture, or they themselves investing in venture, or indeed our licensed fund managers getting used to the asset class. And I know some of the licensed fund managers have been telling me, our investors have gotten money on unit trusts, but they're saying, okay, for the money that I've put aside in unit trusts, can you take 5-10% and deploy it, say, in private credit, or indeed in startups? So Bernard, I hope that just answers your question of where this capital could come from to solve the problem, and also on the startup education and why it's important. Now, Edson, you raise a very pertinent issue. Yes, investors want a return, and to attract their capital to get that return, they will want to see success stories. I must admit that at Kane, for example, while we worked with entrepreneurs, we have not been able to we closed one deal where we got some entrepreneurs within Kane to invest in a startup. That particular startup, the entrepreneur closed that business, so it has not been a success. But I do know within our startup ecosystem, there are companies that took some VC money or angel money and have been able to get a return. So I did host once one of our founders who started Yugabus, and I think I put it on the record. He did tell us that he got 10 to 12x exit return for his investors. Yeah, and I think this was over it must have been about I don't know if it was over a 5-year period, because I started. I remember I was one of his. I mentored him at his first accelerator, and so he managed to exit at 10 to 12x over a 5-year period. Now, if you do the maths on that, that is about a 46% return for his investors. Those were investors at angel stage. So that's one I can think about. The others I can think about, there are some companies we have that have been, say, at YC. They are local startups. That is Numida. I'm waiting to see if they'll get an exit and what that will mean for those who invested. We all know about Cheaper Cash. Actually, when Cheaper Cash was just forming, I remember the founder, Serun Georgie, came to, at the time as at the Innovation Village, he came around doing his research about the market, how it was what it was like, understand the problem he was building. But at the time, he was open to angel capital. So these are, I'll talk about Safeboard as well. I don't know if it has been a successful exit. because I don't know the numbers around that, but I know Safe Border, when they were just starting out as well in about 2017, they were looking for angel capital. So I'm giving you examples that you've seen have gone on a path to raise more money. And the typical route is that when you enter as an angel investor, Edson, when the company raises its Series A, you can get a payout, which is what happened to some of the bigger startups we see in other larger ecosystems like Nigeria, Egypt, SA, Kenya, and so on and so forth. So that's where the return come from. I think we're going to see more exits with time that will give you a return. And I hope that the founders won't be shy to tell people so that they can people can participate in that return. Just turning to Justus very quickly, the questions you asked. Well, I've talked about what to look out for in a startup to invest. With regards to how you can join networks such as Kane or Autos Africa Capital, we are available in the public domain. So you can just go to the websites of either organizations and you can drop an email, reach out on LinkedIn, yes? And you can even see on the screen right now, it's showing my email address, my phone number, which is on WhatsApp, so you can reach out to me. Very quickly, why I transited from engineering. Again, when I just finished my studies, I wanted to know how to put money aside into a pension to manage on my own. So I started teaching myself finance. And then someone told me to go and enroll in formal finance courses, which I enrolled in. And I found it was just an interesting field. And so I stuck at it, I stayed in it. I've always been entrepreneurial. So when I was out of uni, one of the first businesses I ever did was I used to pay someone to go and be on the boats on Lake Victoria to get fish. And then I'd sell it to the large-scale fish export companies when it would come onshore. So that was the first venture I got involved in after uni. So getting into venture capital for me is just a combination of the finance knowledge I have and just always being entrepreneurial. So I'm always interested in starting things, learning how things work, solving puzzles, thinking strategy, and applying finance to it. So I ended up being where I am. Yeah. Yeah, Vincent, you've asked me to expound on local angel networks in Uganda. Besides Kane, and I'm sure Kenneth will expound on the other networks that are coming up. In Uganda, besides Kane, I know there's other informal angel network groups. I'm part of them on WhatsApp, and I could ask for you to be added to some of them. But it's just people who've come together and want to see deals. Other than Kane, I've not seen many others making as much noise about where they are or where they exist. But I'd argue that through our local investment clubs, you can build the appetite and the awareness of venture capital investing. And I used to go and give talks at Investment Club Association of Uganda to the investment clubs in Uganda, so they can think about venture capital and think about how they could allocate to venture capital, even if it's 5% of their investment club amount. When you pull it from many clubs, that's your angel network right there. Yeah. So we'll take the next round of questions.
Thank you very much, Kenneth, for those interesting responses. As earlier mentioned, if you have a question, you can raise up your hand. I want to recognize Mr. Vincent Okema, who I think is a very active ecosystem player, but also from the government side of things. And so is Mr. Nixon, who is also a member of SFV, very active member of SFV on the call. I also want to mention that SFV is very open to anyone interested in this conversation. In taking proactive action over this conversation to join us as a member. so that at least you have a direct role you're playing into this conversation. I also want to mention that we have a partner also who is into IP, intellectual property. So when startups are coming on board or you need support with IP, we are definitely able to provide you that linkage and you engage so that your startup gets to start with a better direction on IP. I see Edison still has a question. I also want to ask this question maybe before Edison comes on. It was a question raised during the signups, and it was saying that what is the role of UDB in this conversation? So maybe as you respond to the next round, this round of questions, you will also allude to that. Over to you, Edison. I hope this is not an old hand.
No, it isn't.
Okay.
Thank you very much, Kenneth, for your response to my previous question. Could you talk a bit about your experience with the different instruments? Like I mentioned earlier, success, I think some of the examples you gave, the gentleman from Ugabas, a good friend of mine as well. So beyond, equity investment, what other instruments can the investors on this platform think about? And maybe even from your experience in the ecosystem, what have you seen working well as the ecosystem develops, of course, into equity and the most common venture capital instruments that are used?
Yeah, thank you. So yeah, Edson, let me, I will share from my experience which instruments I've seen in use and what would be best to use. But before I do that, I'll just briefly talk about UDB. So UDB is what we call a development financing institution, and they generally exist to be able to invest at that risk layer where maybe more commercial investors will not play. And I see UDB as part of a blended finance solution when you're looking to invest. To date, UDB has been providing, I would say concessional, but certainly attractive debt. They do debt in the ranges of, I guess, could be anywhere between 10 and 14% per annum in local currency, which is good because that compares to equivalent in foreign currency. So they do debt, but of course, for debt, you need to have your collateral because that's the way debt instrument works. And debt is a bit more senior in the risk structure of or the capital structure of the business. But UDB have also been dabbling in equity. For example, UDB is an investor in Tripesa. UDB is an investor in I don't know, it's not Abacus, but it's a biopharma business. UDC, and there's a number of other equity checks they've been writing. So UDC has a role as well, has had a role on the equity side as well, investing in startups. But I must admit, they've not invested in startups at a very early stage. They invest when you've developed some kind of track record, which is fine because there's a whole spectrum. If you come to me with an idea, the kind of investor you'll be looking for might not be UDB. But I'd like to say UDB should probably be working in concert or together with UDC and together with NSSF to bridge a gap along that startup journey for you. UDB has been instrumental, of course, in their capital has to be aligned to the development goals of our country, which are around agro-industrialization, which are around greening the economy, which may be around mineral beneficiation, which is aligned a bit to what UDC does. So those two, I'd say, the focus and where the invest is going to be the same. So if you're, and most times they will probably not go for startups, but if you're a business, an SME business that is aligned with those clear growth agendas, your majority Ugandan owned, because I know that is a criteria for them, and then you can go to them, and through their equity window, UDB will give you money. The same will apply to UDC. So that's my comment on what I see as a role of what has been the role of UDBs to date, and I think it could be the same role going forward. But I think maybe I'd want to see them as doing it more at a wholesale level, and like I said when I presented, what UDB, UDC, NSSF I feel can do is to catalyze those other alternative capital managers that are trying to set up. Yes. So for example, the way NSSF put money in yield fund, which was managed by a local fund manager. So that's what I'd like to see more of UDB, UDC, NSSF do with their maybe equity, private equity, VC investing. So I hope that's enough on a role. Just turning to the experience with the instruments. So I've been involved with the instruments along the spectrum, and I'll maybe talk about them in order of increasing risk. So, of course, ideally, you'd want debt which is guaranteed by collateral. But if you're very open to risk, you'd be open to taking equity, and in this case, ordinary equity, which has the last right to receive money when the founder or startup makes a return. I've had experience with debt-like instruments. So right now at Total Africa Capital, we deploy on a revenue or profit share basis. We have not taken collateral, but the collateral is the product we are funding for, because some of the startups we've given money maybe are Muslim founders that cannot take a loan from a bank, or are precious about their equity and they don't want to give it out, but you see a clear opportunity that will help them grow revenue, and they can give you a share of the profit without giving up equity. But we ask for equity as collateral anyway, so they sign over some equity, even if we are taking profit or revenue share. So I have experience using that type of instrument in transport and logistics sector, in the health sector. We've used those in the financial services sector. So we've used those kind of instruments. The other instruments I've seen in use in the ecosystem is convertible debt. So this is less risky than the previous ones I've mentioned around revenue share, but it gives you the ability to convert. So it's like an option on the business. You levy an interest rate on the business that they have to pay, but your principal, you could convert it to equity in the business at a valuation you set today. So that one, startups are also open to. A version of that which is very risky as you're turning towards equity is what is called a simplified agreement for future equity, where you say, we'll give you money, and again, entrepreneurs are used to these instruments. We'll give you money, but we'll convert at a future date at a valuation, again, we set today, but we won't levy an interest rate on that. So that's an instrument I'm also familiar with. In one of my the businesses we founded, we raised a lot on a safe, but you have to keep tracking them and to track the valuation at which you're raising, and make sure you're not entering a down round, or if you're entering a down round, all the investors know a down round is just when you raise money at a valuation that is lower than the valuation you raised at in the previous round. So entrepreneurs are used to safes. Then of course there's preferential shares with liquidation rights. Again, that's an instrument that could be used where you say we're giving you this money, but if we make a return, you have to first pay back the financing we've given you at a certain multiple, maybe 1.2 times, 2 times, and then we participate pro rata based on what stake you've given us in the business. Practical example, I invest 100,000 in a business. I say I want 20% shares in the business with 1.2 times liquidation preference. It means if the business makes a return and I've invested 100K, they have to first pay me back at 120K. Then I participate up to 20% in the economics of the profit of the business. So those are the kind of instruments or agreements that are signed usually when you have, say, Series A type of funding onwards. There's liquidation preferences usually in there. And then the last one everyone knows is straight shares, where invest in a business, you get this percentage. So again, I've seen those kind of instruments. They're used in our market as well in Uganda. So it's about just knowing the type of the business. Is it cash flow rich? Is it in a certain sector? Is it highly sought after? Therefore, the founder has negotiating power. So as an investor, that's why I said to be a highly impactful investor, you need to know these instruments and you know how they're deployed and what the terms are. I hope that answers the question, Edson.
So one part is missing. What has been your experience in terms of success of these instruments, the ones you've just gone through?
So I guess what you define as success, you deploy the instrument, the entrepreneur accepts it, it sits on their cap table, you're waiting for a liquidation event, or you're waiting for them to pay you back. For the debt with revenue share, I'd say those have been the most successful because they are self-liquidating. It means they pay us back, these entrepreneurs. When they sell, they get revenue, they pay back our money with whatever profit share we've asked for. So those ones are self-liquidating, and the trade ends, you move on. Those you'd say have been the most successful. For the safes, we're waiting for an exit. Yeah, because the whole point about a safe is either, or equity, is either the business is cash flow positive and paying you a dividend. And that's why when I presented, I said, as an investor, you have to be able to push a business towards break-even, or so that it can pay you from its profits, because you'll be waiting for an exit for a long time, because in our markets, exits are few and far in between. Yeah. So yeah, the instruments work, the entrepreneurs know about them, we use them, we are waiting for exits, but where they're self-liquidating, cash is being paid. Of course, there are some, like the way you'd have loans, there are some investments that have not worked out, that have failed. And I'll speak about a frustration here sometimes I then have with entrepreneurs, is the failure to just communicate when things are going badly. So you want to see how entrepreneurs behave. Yeah, how entrepreneurs behave. So yeah.
Okay, thank you very much. Humphrey, you have a question. You may kindly unmute and sound your question.
Yes, hi, can you hear me?
Yes.
Yes, hi. I have two questions actually, and thank you for allowing me to ask. So Kenneth, I want to ask, when we look at global private equity trends, particularly in places like Silicon Valley or parts of Asia, we've seen PE funds take bold risks or unconventional ventures, from clean energy to AI to deep tech. And these investments were far from guaranteed, but they have led to entire industries being created and massive economic transformation. And I think this is vastly important in Africa because we have unique problems, unique demographics that require unique solutions. In contrast, African private equity, from my little experience, especially in Uganda, still appears largely focused on safer, cash-generating sectors, like trade finance, retail, or maybe real estate. My first question, this is the first question. Do you believe that African private equity, as it's currently structured, has the risk appetite or flexibility to back high-risk, high-impact ventures? And if not, what needs to change for Uganda to experience like the kind of catalytic development that we've seen elsewhere when investors are willing to bet on innovation rather than certainty? And the other question, and I hope this is not too much content at once, I want to ask, so I would like to hear your perspective on AI in particular. Do you think African investment firms are truly ready to invest in AI-driven solutions, especially those built locally? From my experience, there's often a skepticism around whether we as African innovators can actually build these technologies. The hesitation probably seems to stem from a limited understanding of the underlying tech, which I believe unintentionally may stifle the innovation. But as I said, we have unique and deeply local challenges so that sometimes require novel AI-enabled solutions. And yet funding seems available for the most simpler, more familiar models like trading, fintech. If you make two pitches and then one of them is like some crazy something AI, and then one is just like simple language model, you normally find that the investors gravitate towards the simple thing. So how do we change our mindset in the investment ecosystem? I hope I was clear, maybe. Hello?
Yes, hi, I can hear you. You are quite clear.
Okay, perfect. Thank you.
Humphrey, those two questions may seem different, but in my view, they are the same and touch on the same thing as I see it. And I think it comes down. So when they are teaching us investing 101 on the CFA class, they talk about matching risk to return appetite. But when they talk about risk, they talk about two things. They talk about what we call willingness to take risk, and we talk about the ability to take risk. And when I tackle each of those one by one, what we find in our market a lot of the times, and this is part of the reason why I do these talks, I write, because we find most times there is a mismatch between the ability and the willingness to take risk. And at the heart of it, that's the problem in our ecosystem, in our markets. Because what other ecosystems tend to have on us is maybe many years of investing and many years of people knowing themselves and knowing their ability or their willingness to take risk. So we have a bit of a mismatch in our economies, in that those who may have the ability to take the risk might not be willing. Those who may be willing to take the risk might not have the ability. So you find that for RPEVC, and they combine this with that mantra of invest in what you know. If they feel that there is an investment, there is a need, there is a market that they know that will still give them returns, of course, they'd rather go down that route than go for what they feel is going to be unconventional, new, and untried. And what this just shows us is then that you as if you're asking from the point of view of an entrepreneur or founder who's looking for investing, you have to be very good at spotting who your ideal investor is and not go pitch everyone. But secondly, and as a counter to that, as if you're looking at it as an investor, you have to constantly be assessing that match between ability and willingness to take risk. And matching that, especially ability, can come with just knowing yourself, knowing how much capital you have, knowing whether you can absorb impact for these, because some of these unconventional investments, even things like AI, they're a bit out there for us as investors in Africa, and you should be ready to absorb the impact that comes with them going wrong. And mostly, and this is where you have to make the distinction. If you're managing external capital or third-party people's capital versus if you're deploying your own capital, you may afford to take risks with your own capital. Say I may be sitting in the bank with, let's say I'm sitting in the bank with 1 billion in treasury bills, and I've put it on a 20-year treasury bill, which is giving me 18% per year. It means that's 180 million in a year. That's 15 million per month. And I don't have a mortgage on the house I live in. I run businesses that can pay for my needs. If that's the situation I'm in position to take risk, but I might not be aware of that. Yeah. And so in that case, we need to constantly be educating our investors about this mismatch around their ability and their willingness. Yeah. And I mean, how do we move them? Yeah, that's it. We educate them, we show them, we make sure we pick the right ones for us, because there'll be some of us who are mavericks out there. Like right now, I'm entertaining AI pitches. I'm working with the AI developers to build solutions. So if I was sitting with a large pool of capital, I'm the one you'd pitch for your AI investment, but you'd not go pitch it to other investors. So you as an entrepreneur looking for investors, you have to know. You as an investor, you have to know whether you can afford to take that risk appetite. And the way we are going to get there is by just educating, showing, telling these stories about returns from investing in things that were very unconventional. And hopefully with time, we'll reduce that gap. That gap will never go away, but you can make it smaller. Yeah.
Okay, thank you so much. Thank you so much. I think that was good. Thank you.
Great. Thank you very much, colleagues, ladies and gentlemen. Our sessions run for 1 hour and a half, and I think at this particular time, we are just getting short of time. And I want to take this honor and privilege to acknowledge and thank our collaborators, partners, as you can see, Uganda Management Institute, Tech Buzz Hub, Startup Funding Vehicles, also Otas Africa for accepting to take us through a session of today, very, very insightful session, and to you most particularly, Mr. Kenneth Legacy. We are very, very grateful and humbled for your time, for your experience, and for your knowledge into this ecosystem. We know that at least with you, we are able to do something about investment, local investment, investor networks, venture capital spaces, and angel spaces in Uganda. And maybe tomorrow, the other day, we can brag that our ecosystem is now able to self-sustain. Of course, especially with these situations of a president coming in and deciding to say no funding will be going to another country. on whichever terms they choose to make that statement, and that is implemented with that directive is implemented with immediate effect. Yeah, so we believe that together we can work out changing this narrative, and all we need to do is have some proactive action on this conversation. I want to also recognize one of our members, I think, or two of our members that are on the call. I see Christine Adong and also Mr. Epathroditas Othieno. We have a very good member turn up. I think I saw Dr. Charles also on the call. We acknowledge and are glad to say that these are members who are making this possible, who are helping or supporting some of these conversations to happen. And with that, I want to request our guest speaker to give a concluding remark or his parting shots. And for those who were not on the call and have not heard about startup funding vehicles before, as the guest speaker wraps up or makes his parting shots, I will have about 5 minutes to quickly take you through the presentation of startup funding vehicles and how you can participate or be part of the conversation, not just a passive member, but rather an active member. Over to you, Kenneth, if you're still on the call.
Thank you. Yes, I'm still on the call. Just thank you to all of you for engaging in our discussions today and for the questions you've asked. I'd say the capital we need has to come from within ourselves as Ugandans, as Africans. We don't need to wait for external capital to validate our innovation. So please go ahead and start now. Write your first check, however small. Believe in an entrepreneur, and just build yourself so you can give the entrepreneurs what they need. So whether it's mentorship, access to customers, just unlock and help. And I hope we can then be the generation that we say funded Africa's transformation. And in the process, we grow ourselves in terms of wealth, but in terms of also giving to our communities. So thank you again, and I look forward to collaborating with many of you. And as I said, my contacts are on the screen. If you want to reach out, please feel free to do so we can help any way we can in getting you on your investor journey. Thank you very much. And thank you, Startup Funding Vehicles, for the opportunity just to share with everyone today. And I applaud the work you're doing. We all need to be building the ecosystem by talking about these things. So I'm glad this is happening. Thank you.
Thank you. Thank you very much once again, Kenneth, for giving us your time, your experience, and your insights over this conversation. And I think everyone who had the opportunity to attend, you can't leave the same. In fact, if you had one or two things that you learned from the conversation, it would be nice to put them in the chat in one or two words, so that we are able to know how much you have been able to take, or even use reaction icons to express your feeling right about now. Maybe if you feel you have gained so much, you can use a thumbs up, you can use love icons and all that, so that maybe that provides an insight of how the conversation was for you. For those who have not, thank you very much Godfrey, I see you love the conversation. For those who were not on the call while we started and do not know much about startup funding vehicles, I am going to take about 5 minutes to quickly tell you what startup funding vehicles is, and then we can call it a day. Thank you very much, Othieno, for showing your feeling about now. Startup funding vehicles is an initiative by TechBuzz Hub, but open to the ecosystem, and it focuses on strengthening local investor networks, just as the ones we have been talking about. We focus, or we hope we target to promote and empower local investors and support homegrown startups. So if we empower local investors, then we will be able, or they will be able to support our startups here in Uganda. Most startups mention that access to funding or investors is their biggest challenge, and this affects their growth and their ability to attract external funding. And of course, with a strong local investor network, it means these challenges right above here will be solved. Just a quick case study, we see that in Nigeria, they were able to raise 1.2 billion US dollars locally. In Uganda, we barely have any of those figures or any figures in that relation, as we had in the conversation. We are still really nascent and trying to make developments. And in Kenya, 8% was 8% of their GDP was contributed through their Silicon Savannah, a place for startups, just like the Silicon Valley of the US. South Africa's financial inclusion grew by 23%. That is from 34% to 57% within a period of about 8-9 years, about 8-7 years. So that tells you about the story and the potential of, supporting locally these startups. Egypt was able to raise 100 millions in 2020. Local investment here is what we are talking about. We're not talking about anything external. In the hope of thinking that funding can support startups, and given the figures that were highlighted by our guest speaker, that 7% of global funding that come to Africa is locally sourced. That is very, very challenging and by the way, whenever we are trying to, if you have been an entrepreneur, they will always tell you the first capital you get is the 3 Fs, friends, family, and fools. And all these, for the most part, if you went by order, maybe fools can also be somehow, somewhere from foreign countries or foreign direct investments. But if we looked at family, friends, begin there. So if we can't get funding from our local or our home, it becomes extremely hard to raise externally. And one of the other statistic available is that per year we receive only 2 billion US dollars over the whole continent. And of course, with figures that are about 2 years, speaking to about 11.5 to 12 billions raised in 5 years for the entire continent, that already gives you an average that 2 of the 2 billions are raised on the continent per year. However, we have $40 billion locally to unlock. So it tells you that we have a lot of money locally, but we have not figured or cracked a way of, tapping into that $40 billion, and we would definitely be able to grow our economies, I think, not even tenfold, just as our country is anticipating. But again, I also think that we cannot grow this country tenfold if we don't have local people who are entrusting resources into local startups, to be specific. So I think it is a proactive action that needs to be undertaken. And as we can see on the screen, Nigeria is taking the biggest share, Kenya, South Africa, and Egypt in 5 years period. This is in 5 years period. But what we see vividly is their angel or venture capital networks are many, but of course, I also think very active. We see 6 of them in Nigeria, 5 of them in South Africa, 5 of them in Egypt, 2 of them in Kenya. I think they have a certain formula we haven't understood, but we're also not very far. We see 3 of them, and we know from 2023 up to date, maybe some of them have even increased their capacity and stuff like that. So we think that the role of startup funding vehicles will be phenomenal and will contribute a lot, especially if you join us to change this narrative. The vision board of startup funding vehicles is creating a robust investment culture, investor knowledge and learning, making sure that we empower the ecosystem to have the right knowledge, not just, theoretical knowledge that we get from university. Conversations like these, I am sure everyone who came in this engagement have now a different perspective of what needs to be done for us to, support startups. Even when you do not have the resources, at least you have this, you can run a conversation around this topic. And that is, for the most part, all we need. We need ambassadors to go out there and speak in, those CEO conversations, those boardrooms and what have you. And under knowledge learning series is to educate investors on startup opportunities, which are on the way, engage stakeholders to enhance local funding. Those could be high net worth individuals. It could be corporate venture capital, which are companies investing in smaller companies, for example, or in startups. And then sharing insights and best practices from industry experts, just like we were honored by Kenneth today. We have been able to achieve a few milestones. Research in collaboration with the Uganda National Council for Science and Technology, which is the institution that authorizes nationwide research. And we have actively been in the ecosystem, participating in investor conversations, trainings, and so on and so forth. And of course, we have hosted so far. This is the 6th Investor Learning Series session. Next week, we shall be having another one. And then in National Science Week, we are going to have 3 sessions in one keynote address, in one panel, which makes 10 investor sessions, and that will also relate to who gets a certificate and how to get a certificate. So we have about 4 of them, which hasn't yet happened. So you have an opportunity to get yourself a certificate, of course. We have been involved in very many activities. As earlier mentioned, these are pictorials that demonstrate that. Here is a Tunisian road trip that visited startup funding vehicles and discussed some progress. This is the research. This is, of course, National Competitiveness Forum. We have been participating in startup champion kind of activities and fundraising. What next for SFV or startup funding vehicles? We hope to undertake very soon a funding landscape study. We are looking forward to developing investor networks in collaboration with, of course, the experts already in the ecosystem. Startup investment support centers, as earlier mentioned, one of the biggest things that are required is knowledge, is having, being able to educate practically these entrepreneurs to build investable solutions, to have solutions that really have or can produce a return on investment. Diverse funding mechanisms, of course, being able to develop some of those, such as branded financing, angel investment, venture capital, and so on and so forth. Of course, not forgetting some of the granting could be driven by government through maybe policy interventions as well. Strategic collaborations, this is very pertinent and very critical, and I can't fail to emphasize it, and that is why I'm making this presentation as well. We need to work together. If we cannot work together, this conversation is going to stop here and will die. And if you realize that from here you will not get back to this conversation, just know that is how big dreams die. But we are saying that come on board, be proactive, let's work together and be able to change the narrative on our continent. Even if you're not the direct person to benefit from this, but maybe your friend, your relative, your son, your grandchild might be the beneficiary, and things could turn around. To be proactive, of course, we are saying keep engaging into these knowledge and learning series so that you are the right person to speak to entrepreneurs. Don't make a decision. You will never make a decision as an investor when you do not understand what decision you're making. Then it means that you are the fool we're talking about. Those fools are very actually aware. It's not that they are fools in the 3 Fs, but what we're saying is at least for you to have a conversation that is valuable to make a return on any investment you make, you need to have the knowledge first, the experience, the understanding. Be part of the Uganda investor ecosystem by joining startup funding vehicles through that link. Then, of course, collaborations, we encourage you to link us to institutions for corporate venture capital financing. You can also come on board, and so on and so forth. Soft launching, we are going to be launching soft launching SFV in the National Science, Technology and Innovation event of National Science Week next 2 weeks. And we invite you all to be part of that big event. Very many investors are going to be flown into the country, and that is an opportunity to network and have even a global perspective over this conversation. Several programs are coming up. As we can see down here, we are very soon going to launch a call for exposure to the Africa's entire ecosystem through AfriLabs, which is going to be happening in October, and so you need to look forward to that. If you need to start saving, we will have a team that will be taking a bus and a team that will also be taking a flight, depending on your budget. And of course, beware that there are entrance fees for you to get into these events. Become an investor training. Very soon, we are going to sign some collaborations, especially with Africa Federation of Angel Investors, Business Angel Networks, and they will be undertaking or doing investor training. Different from these webinars, those ones are hinged on someone who is going to make an investment at the end of the training. So you are taking the training not for leisure or luxury, but come out and make your first, maybe what we call syndicated, fund to the startups that you will have started during this training. It is going to be that practical. You won't just be doing theory. You will actually be looking at a startup, evaluating it together, understanding the dynamics, and so on and so forth. But the call will also be on its way. And many other programs, as you can see, being an entrepreneur, that has been emphasized also by our guest speaker, the retired, and how they can invest. We know these people are losing a lot of resources to just thinking that with a lot of money now after their retirement, they're able to make sense of it, which ends up dying in 1 or 2 years of their 30 years of saving. We have hosted so many of these events, and as we can see today, we had Mr. Kenneth Legacy, who was such an awesome speaker and experienced person. Next week, we shall be having now a conversation from a startup champion perspective. Today, we had from the investor perspective, from the investor perspective or investor network builder perspective. This time we are going to hear from a startup champion perspective, how you can, or what hacks you need to have to attract local investors or even external investors. To be part of this conversation actively is not an open check, because we know everything free, people take it for granted. And besides that, we need to be able to run certain activities, just like we are going to soft launch. we need to, fuel some of these things with labor, with other resources. So you can join with different packages. Each of these packages have benefits, but at the same time, responsibilities. So that is very good and very critical to note. At the end of this program, webinars and the certificates are going to be awarded in our soft launch at the National Science Week. If you have attended 60% of these sessions, so far we have had, this is the 6th, we have 4 of them left. The next one is happening next week, same time. And then 3 of them are going to happen in the National Science Week. If you are able to attend all these, you will have yourself a Basics of Investor Entrepreneur course certificate, which I believe that will make you a very great person to represent either a startup, get a role in any, make you competitive to either get a job in an investment firm that soon will be opening up, or something in that line. This is just a sample demonstration of the certificate, but we'll have a specific certificate which will be specific for this program. Otherwise, I want to thank you very much for taking the time to listen to me, to attend this event, and we hope you have been able to learn so much. If you want to be part of SFV, the only way to get into is to express your interest through this link, and then you can be able to join actively SFV. Because like I said, whereas it is championed by TechBuzz Hub, it is open to the entire ecosystem. Companies are able to join as corporates. We have actually on the partner side of it, besides the individual options here, we have partner packages where we look at experts, where we look at companies, where we look at organizations, where we look at multinationals. So you shouldn't be limited to just individual memberships. And like I said, each of these packages have benefits as well as responsibilities. Other than that, I want to stop here and wish you a great Eid Day and weekend, plus Heroes Day, which is coming ahead of this week. It's been a very huge, big break, and I want to congratulate you for taking the time in the break to learn and add something new on yourself. I know you might have known so much already, but I believe you have at least had an opportunity to learn 1 or 2 things about SFV, about investment and investor networks in Uganda. With that, I want to call off this meeting to close. Thank you and bye-bye.